Cipher Mining stock, ticker symbol CIFR, took a beating today. It closed Wednesday, November 12th, at $17.38, down $1.29, or almost 7%. It wasn't alone. Markets and tech stocks were broadly down across the board. But the question everyone's asking is this: was there anything specific happening with Cipher, or is this simply another victim of market volatility? And more importantly, is this pullback the start of a bigger downtrend, or an opportunity in disguise? Let's rewind a bit. Cipher Mining has been one of the most talked about small to mid-cap stocks in recent weeks. It made headlines when it announced a massive 15-year, $5.5 billion lease deal with Amazon Web Services to provide up to 300 megawatts of capacity for artificial intelligence and high-performance computing workloads. That deal was seen as the company's official graduation from being a pure Bitcoin miner to becoming an AI infrastructure provider. The stock soared, hitting an all-time high above $25 just days ago. Analysts like Needham & Company raised their price targets, and investors were buzzing about Cipher being the next breakout AI infrastructure play. But just as quickly as it climbed, the stock has come back to earth. So, what happened? Was the market wrong about Cipher? Not necessarily. In fact, what we're seeing right now might be less about Cipher itself and more about the broader market environment it's operating in. Wednesday was a tough day for nearly all growth and technology stocks. Inflation fears have been flaring up again, and talk of renewed trade tensions between the US and China hit sentiment hard. When those macroeconomic fears resurface, riskier assets like emerging AI plays and tech infrastructure companies are usually the first to get hit. So part of Cipher's sell-off today is simply the result of a risk-off day, when investors pull money out of anything perceived as volatile. But there's also an element of timing and psychology here. Cipher's stock had run hot. After nearly tripling in a few months, some profit-taking was inevitable. For short-term traders, the combination of a red-hot rally, new debt announcements, and shaky macro headlines was all the excuse they needed to lock in gains. And yes, the company did add a layer of complexity to its story with that new financing announcement. Cipher recently priced $1.4 billion in senior secured notes to fund construction of its Barber Lake facility in Texas, one of the key sites supporting the Amazon contract. That's a big number, especially for a company that's still in transition mode. Some investors see that as a bold expansion move, while others view it as a sign of increased risk. In an environment where interest rates remain high, large amounts of new debt tend to make people nervous. It's also worth remembering that Cipher's transformation into an AI infrastructure company is still in the early stages. The AWS deal was a huge win, but the revenue from that contract won't start flowing immediately. The real payments from that lease don't begin until August 2026. That's almost 2 years away. So while Cipher is setting up an exciting long-term story, the near-term financials are still dependent on execution, not just potential. And when a company's big catalyst is far out on the horizon, the stock can be extremely volatile along the way. Another factor that may have contributed to today's decline is insider selling. Over the past couple of weeks, filings have shown some insiders trimming positions. While this isn't uncommon after a big rally, it can send a psychological signal to the market that those closest to the company might see limited short-term upside. Whether or not that's true, perception alone can weigh on a stock like Cipher in an already fragile market environment. So with all that said, is this pullback a warning sign or a healthy reset? I'd argue it's more of the latter. The fundamentals that drove Cipher's run in the first place haven't changed. The company still has a transformative deal with Amazon Web Services. It still has a partnership with Google and FluidStack for AI and data hosting. It's still expanding its presence in Texas, where it benefits from access to relatively cheap power, scalable land, and a growing data infrastructure ecosystem. All of that remains intact. The real question now is execution. Can Cipher deliver on the build-out of these facilities? Can it manage its new debt responsibly? And can it prove to investors that the pivot from Bitcoin mining to AI infrastructure isn't just a headline, but a sustainable business model? Those are the things the market will be watching closely in the coming months. To understand where Cipher might go from here, we need to look at what's next on its calendar. The company is currently participating in a series of investor conferences this week, including the Cantor Crypto and AI Infrastructure Conference and the JP Morgan US Opportunities Forum. These are important appearances. Management will likely use these platforms to reassure investors about its funding, its construction timeline, and the scalability of its new projects. If those presentations land well, they could easily spark a rebound. In other words, This may simply be a case of the stock cooling off before its next wave of headlines. And to be clear, cooling off isn't necessarily a bad thing. It can actually strengthen the base for the next leg higher, especially if the company keeps executing. From a narrative standpoint, Cipher remains one of the most interesting crossover stories in the market right now. It's not just another AI software company, and it's no longer a pure crypto miner. It's sitting in the middle of one of the most essential bottlenecks in modern technology, the shortage of power and physical infrastructure for AI computing. Everyone talks about the chips, NVIDIA, AMD, and others, but those chips are useless without the power and cooling capacity to run them at scale. That's where Cipher's expertise in managing high-load operations becomes a strategic advantage. Now let's talk risk, because it's important to keep perspective. Cipher's journey from Bitcoin to AI isn't without challenges. The company has to prove it can manage large-scale construction projects without delays or cost overruns. It needs to ensure its new data centers can attract and retain long-term clients beyond the AWS contract. And with so much debt on its books, interest expenses and financial flexibility will need to be managed very carefully. This isn't a startup burning venture cash, it's an expanding infrastructure company trying to scale responsibly under the market's microscope. Another risk lies in valuation. After the run-up to $25, Cipher was trading well above many analysts' fair value targets. The pullback brings it closer to those levels, but sentiment remains key. If broader markets continue to fall, even good companies can get dragged down further. That's just how high beta stocks behave during corrections. But let's not lose sight of the big picture. The world's largest tech companies are in a race to secure AI infrastructure. Amazon, Microsoft, and Google are all investing billions in data center expansion, renewable energy, and cooling systems. Smaller players who can provide ready-to-build capacity, especially in energy-rich regions, are in high demand. Cipher's positioning in Texas gives it a significant edge here. It's already proven it can deploy and manage high-density power usage from its mining operations, and it's now redeploying that know-how for AI computing. That's the essence of its evolution story. So while today's 7% drop might feel dramatic, it doesn't change the long-term trajectory. The company's challenge now is to execute and communicate clearly. Investors will want transparency on timelines, costs, and cash flow as these projects progress. If Cipher continues to meet milestones and reassure the market, confidence will rebuild quickly. For retail investors, this kind of volatility can be unnerving, but it also creates opportunity. If you believe in the AI infrastructure theme and the role companies like Cipher will play, short-term weakness can be a moment to accumulate rather than panic. On the flip side, if you're skeptical about the macro backdrop or wary of leverage, it might be worth waiting for more concrete proof that the pivot is translating into measurable results. In many ways, Cipher's current position mirrors where companies like IREN were months ago. Transitioning narratives, heavy investment periods, and skeptical investors waiting for validation. And just like those stories, the turning point often comes not from hype, but from quiet, consistent progress. To wrap up, Cipher's 6.9% drop today looks more like a reset than a reversal. The fundamentals are still there. The AWS deal is still intact. The debt financing is large, but strategic. The macro environment is tough, but temporary. What matters now is execution, communication, and patience. The AI infrastructure revolution isn't a one-week trend, it's a multi-year build-out, and Cipher Mining is aiming to be part of that backbone. So yes, the stock took a hit today. But the story isn't broken, it's simply entering its next chapter. And for long-term investors who understand that innovation doesn't move in straight lines, that might be the most interesting part of the story yet.